Hello, am I audible to everyone?
Yes, ma'am.
Yes, ma'am.
Okay, then let's begin then. So today we are going to first let me introduce myself to you. I'm Sangeeta Verma, and today's topic in a finance is financial market. And I have done my MBA in banking, and recently I have completed my master's in philosophy. In this slide, you can see my work experiences. I'm so sorry, I will not like to waste your much time in my introduction, and shall begin the session. Today's topic is financial market, and financial market is very important to understand when you really want to make your career in a finance. So what it is, market which entities can trade financial securities, commodities at low transaction cost and at prices that reflect supply and demand. Securities include stocks and bonds, and commodities include precious metals or agriculture goods. So, if you see, a financial market refers to a place where a business, where a business deals with different types of bonds and securities are traded. These include different financial securities like bond market, share market, forex market, derivative markets, etc. And these markets are crucial for the smooth functioning of a capitalist economy. Very important. And it serves as an agent between various collection and investors. Essentially, these markets mobilize capital flow between investors and collectors. A company is always in a way of generating liquidation position with the help of the financial securities, commodities, stocks, shares, debentures, bonds, and commodities. So a company always liquidates. If you want to become a financial market expert, you need to have ample of 3 to 4 hours, a proper keen interest on this. Because just for half an hour, 20 minutes, keeping an eye on that uh, jumping of low down and how low down and up down won't be making you a proper trader, right? You need to have a ample of understanding, ample of knowledge, and ample of time dedication for that, because whatever plays is plays in a blink of eye. You can just think of, you are just having a glass of water, you purchased, you invested in something, and all of a sudden it was like, so just not playing randomly in this financial market, but understanding the risk factor is very important. So when financial markets helps in smoothing functioning of economies by allocating resources while also creating liquidity for business enterprise. If a business people are having keen interest in financial markets, they know at what time they need fund for their companies, and that particular time they can have a bang on and create a liquidation position for their companies. So different types of financial holding can be traded in these markets. Like a vital importance of financial market is that it enforces informational transparency, to say it, efficient and appropriate market process. So when it comes with the macroeconomics factors like tax and other aspects, other influence the market values, all these financial holdings which are not indicative of their intrinsic value. There are various types of financial market. The best one or the top one is New York Stock Exchange, which is the biggest stock market on this globe. And with along with them, we try to run our Stock Exchange Board of India. So as an these, the financial markets is in the flow of investment and saving, and in turn what it does, you need to have an eye on a investment of significantly growth of the funds, understanding the risk factors, understanding the risk averted positions, and knowing at what time you can have a bang on of your stocks, bonds, and commodities and precious metals. So this is what the concept of financial market. Now when you go with the financial markets types, is very vast. It's just not a glass of water from a bucket. It's actually full of tanky from a tanker. So financial market is very vast, and you need to understand every concept of it if you want to become a very good trader. So financial markets, there are many, like over the counter market, equity market, debt market, secondary market, primary market, capital market, money market, future market, cash or spot market, and exchange traded market. But we, what if we want to become from an initial phase, the best one is over the counter market. What happens over here is like we can have the financial market entry in any sort of physical location, like this refers to decentralized financial market. And in these market, traders can conduct directly, like to the brokers, and contact electronically. And these markets handle exchange preliminaries and are which are not listed in stock exchange. Like so, slowly you understand the concept of, means these markets are used for trading by small companies which are not primary financial markets. They do not exist in, they do not run the, like in a scrolling you can see, but they invest in the stock exchange board of India as an over the counter market, and you can slowly and gradually learn the concept of with the financial markets primary basics. So over the counter. Then comes bond market. Bonds are basically securities which allow investors to loan a sum of transparency with the fixed period of maturity and also have predetermined interest rate. So bonds, obviously, they what they do is they fix a particular percentage and particular time period, and they keep on running with that. Means what happens is predetermined interest rate is there, fixed period is there, and you need to understand what are the types of financial market. Like students need to understand what are notes, bills, bonds, etc. All this comes under bond market, and also known as debt market, like credit markets and fixed income markets, lenders, borrowers, tenors, agreements, deeds, relevant interest values. All this gets combined in the bond market. So bond is actually a basically a concept of investing with a fixed period of time, fixed interest. Company keeps on getting, and they make sure that those who have purchased the bond of their company are on a beneficial zone. So this is what bond market. Now what majorly is a money market. Especially money market plays vital role for any sort of, you can say, business empires. What is like these markets trade in highly liquid financial holding, which other than are not like maturity tenure, short term, long term. At what time the company is in a proper demand of a liquidation position, money market has to be understood in that way, and that money market position plays a vital role for the companies. By such you can understand in one concept is that like these markets are like retail trading of mutual funds, debentures, shares, and these market like record high volume trade between companies. And every time the risk zone factor is taken up, every fluctuations over there. But it is very important for the companies to, instead of fluctuating time and again, keeping a very tough result and benefiting the people who have taken the shares or the debentures or the mutual fund of that. So money market is actually a basketball full of liquidating for the companies. Then there's a derivative market, then there's a forex market, vast markets are there. So these are the concepts of financial market. Till here, any confusion, guys? Okay, then next slide. Financial institution also comes in the financial market, but they are two different things. Okay, financial institutions are companies in the financial sectors that provide a broad range of business and service, including banking, insurance, and investment management. You can see they keep on running the shares and debentures and bonds in stock exchange board of India. You might have seen in the scrolling. You can find it over there. And then when it comes to the financial market institution role, what happens is like every time it is very important that market are efficient, and this does not imply that individual or institutional investors should ignore the various investment instrument. Investors normally intend to balance the object of high return and no return and the low default risk and accurate liquidity. As time passes, new information about economic conditions and corporate performance becomes available. So, announcements that do not contain any new value information will not elicit a market response. So, it is very important that every time, every information which is shared with the help of financial institutions or financial market, those who are having a way of knowledge in the financial market or who are working in a financial market as a traders, whether that is a company or any individual, need to have a proper calculations of weightage, average, risk factors, risk averted, and risk taker ratio. So this is here. Let's go to the next slide then. Then, when you see the financial market overview, no, if you go with the financial markets, like as I said, derivative market, OTC, other markets, foreign exchange, and stock market. Over here, what you can understand is like bond market is fixed income, corporate bond, government bond, municipal bond, bond valuation, high yield debt. Whereas you go for the stock market, like stocks, preferred stock, common stock, registered shares, voting shares, and stock exchange. Foreign exchange is completely with the exchange of currency rate, which keeps on playing a vital role. Money market, that is other market, reinsurance market, commodity market, and real estate market. Then comes OTC, spot market, forward swaps and options. Derivative markets, securitizations, hybrid security, credit derivatives, and future exchange. So financial markets have combinedly collected every thing, that whether that is foreign exchange, OTC, and all. And this is just not a small fish. This is a complete well, and you need to have a very in-depth knowledge of being a proper financial analyst, business analyst, or trade analyst. So it plays a electric's role in the finance. Now, if you see the money market, there are structures where money has been like distributed. There is organized money structure and organized money, unorganized money structure. Money is always in a two-way. One is organized and one is unorganized. Organized are you will have a properties and all that, and organized plays a vital role like commodities, debtors, uh, these debentures, shares, and other liabilities, and then capital assessments, and then loan facilities, banking services. All these are get combined with that. Now, when you come with the functions of financial market, you should be understanding that this financial market is a well type of things. Like so, it helps you to mobilize funds. How you mobilize funds in this is like among the diverse types of functions solved by financial market, the most crucial function is that of mobilizing of savings. Financial market also utters savings. It makes you a habit of developing saving and investing with the more productive use, therefore contributing to capital. What you do, you keep on say having a way of saving on a shares, debentures, bonds, so that whenever it is required for your business organization to liquidate, the demand of cash and the liquidation can be generated in a very high note, means allows the transfer of funds from person or business without investment opportunity to one who has them, then improves economic efficiency. And even determinations of prices can be like this, means financial market is that market in which different securities, you interact with different investors, then collectors, and you keep on selling out your bonds and shares in a higher note whenever the fund arrangement has to be done. So you, if you see this framework in a cycle, you can see indirect finance and direct finance, funds with the financial intermediaries, funds with the financial markets can be collected, that is lenders and savers, right, households, business and government and foreigners. Whereas if you become, you are thinking of collecting from financial market, what happens, you can have from business firms, governments, households, foreigners. So basically the liquidity of financial holding and ease of access facility has been provided by the financial market to for the booming of your company. And this, what happens is, makes you understand to arrange the funds for your company, that is allocation of funds from financial market, in order to keep your business in a, always on a running situation, always on a running note. Till here, any confusion, guys?
No, ma'am.
Okay, thank you so much. Now let's go to the next slide then. So you, basically financial market, as I said, money market and capital market categorized. Money market comes with the commercial papers, treasury bills and certificate of deposits, whereas capital market comes with stocks, bonds and derivatives. Over here you can see primary market categories and secondary market categories. When you differentiate with the money market and capital market, it's vast difference is there. Like duration, money market are short term, capital market are long term. Money market supplies funds for working capital requirement, whereas capital market supplies funds for fixed capital requirement. Instruments are treasury bill, commercial papers, certificates of deposits, etc. Whereas in capital markets, shares, debentures, bonds, mutual funds, all this plays a role in that. And amount of instrument, each single instrument is of large amount in money market. Where in capital market, the amount is little small in derivatives. Then, when it comes with the institutions, central banks, commercial banks, acceptance houses, non bank financial institutions, bills, broker, etc., they come under the money market. Whereas stock exchange, commercial banks, non-commercial institutions such as insurance company, mortgage banks, building societies, all this comes with the capital market. Capital market risk is very high, whereas in money market less due to smaller maturity in short-term probability of duration in less. Risk is little lesser in money market but higher in capital market. Transaction are on over the phone and no formal place in money market. Okay, but in capital market, transactions are at formal place. You can take an I don't know whether I should be somehow relate. You can say money market these days in people, they mostly deal with the commodities like gold, silver, aluminum, platinum. All these types of transactions are over the phone and no formal place. Whereas the stocks market, who holds the stock at a particular place, there is always two ways, right? So transactions are at a formal place. When in capital market, what happens is you get transactions has to be conducted with the help of broker. But in a money market, transaction without the help of broker can be done. Money market is liquidity adjustment. Capital market, putting capital to work, preferably to long term, secure, and productive employment. In the money market, closely and directly linked with central bank of the country. And banks are closely regulated in this. Whereas in capital market, central banks influence, but mainly indirectly and through the money market. The institutions are not much regulated. So capital market risk is higher, money market risk is lesser. Capital market needs broker, whereas money market does not require broker. Money market is liquidity adjustment. Capital market is in a proper employment sector, that is Stock Exchange Board of India. You can understand SEBI, which is in Mumbai. And people generally, what they do is, if they want to get involved with the capital market, they generally do the course related to Stock Exchange Board of India, and then they become a capital analyst, capital market analyst, and they make it as their employment, and they provide help to the people or the companies or business empires in order to decrease the risk and liquidate the cash transaction flow in the healthy and smooth running of their business. Let's see the financial system. A set of institutions, instruments, and market which promote savings and channel them to their most efficient use. Financial institutions, they are regulatory, intermediary, non. This is a particular chart which flows in a financial market, and financial markets are always organized in an organized primary, secondary, capital, equity, debt, derivatives, and financial instrument are of also of short term, long term, medium. All these gets combined with the financial system, and it's very vast. And if you go with the classification of markets, they are in a four basic framework: by nature of claim, by maturity of claim, by timing of delivery, and by organizational structure. By nature of claim is debt and equity. By nature of maturity, money market and capital market. By timing, cash and futures. By organizational exchange and over the counter market. So, types of money market instruments, as I said: treasury bills, certificate of deposits, and commercial papers. So, this much for today's session, guys. Any queries? We will be next session seeing how the shares and debentures are being calculated and how the values has been distributed, how it is like in a link way of process. Any queries, guys? And there is a small video which I would like to play for you all in order to understand the basic concepts of short animated one. I hope you guys can let me share with you all. I hope it is seen to all of you. So I hope the video also helped you out to understand the concept. And thank you so much for this session attendance. See you again. Thanks.